Hello traders, welcome back to my channel. This is Junoy and I'm here back with one more valuable video that you guys may like. Alright, today we're going to talk about swing trade. We're going to talk about three tech stocks that we've been swing trading and how you can read the charts and learn to find these swing trades for yourself. Let's go. Alright, now when it comes to swing trading, guys, you may be wondering, what is a swing trade? If you don't already know, a swing trade is any trade that you're holding from 2 days to a week to 3 weeks. It's something that you're in for a little bit longer period of time because you really anticipate catching a bigger move inside these stocks. Bigger move means bigger profit. It means bigger money in the bank, right? But before we can jump into the market and start thinking, oh, I want to make big profits, I want to make big swing trades, we have to focus on the most important thing. What is that? The most important thing is learning how to read the charts. Now, when it comes to reading the charts and swing trading, you have to look for something specific. In particular, in what we do, we look for things that present themselves in the stocks, in the charts over and over and over again. So what that simply means is that if they pop up one time or two times and we've seen it, there is a high probability that that very same pattern will show itself sometime in the future. So you have to practice and get good at identifying in those past patterns that actually pop up over and over and over and over again. Once you're able to identify those guys, it comes down to, okay, where do I enter? How do I manage the risk? What is the profit potential? And how do I take this money to the bank? All right, I'm going to show you right here, right now, three tech stocks that, my, they're doing really good, really nice patterns that, we jump in and we're currently still swing trading some of these. We have closed some of them out already for a quick profit, but let me show you how we can do it, all right? Or you can do it. So the first one is actually Chwy. Guys, this stock, when we look at the chart, do you see anything that has happened in the past that happened more than one time? That is as simple as it gets. For real, you break it down, that is really as simple as it gets. And from those small circles that you see I have on the chart, this yellow line is going to be my 50 SMA. The blue line is going to be my 10 EMA and my 20 EMA, and then the white line is going to be my 10 EMA. All right, when we look at this chart, guys, you can see that price action has actually been behaving nicely to one of these moving averages in particular. All right, so when we get closer and we look at it, what do you see? Chwy. We see that right around here, this is back in April. After this stock came down, found the bottom, it ran up, pulled back a little bit, ran up again, and then it pulled back. This is the first time the stock actually pulled back to the 50 SMA, and what happened? We got a nice bounce here. Okay, we probably weren't paying attention right there, right? Then, a little bit more period went by, the stock came back to the 50 SMA and it bounced. We got a nice little run right there. We still probably weren't paying attention. Now we look, price went up, stock came back to the 50 SMA again, and then we have a nice little pop. So you kind of start to get the picture. We look for things that happen over and over and over again, and this is just one example of how the 50 SMA is really acting as support for this specific stock. So we can say, that based on probability, every time or until it don't do it anymore, we can pretty much say once it comes back to the 50 SMA, we're anticipating a bounce. Okay, we've saw that now. So right around this area, we see that price pull back to the 50 SMA. We didn't really get nothing too much. We got a nice little move up here. And then what do you know? We pull back again to the 50 SMA, guys. And this was when I alerted everyone in my community that, hey, we have a new trade on our hands. And this is Chwy. So we got in right around 56. And this thing is now at 64. Guys, that was 10 points. Some persons closed this trade down here today, and some are still riding it out. But what is most important is the fact that we were able to look at the chart and identify a characteristics in the price action that keep on showing itself, and based on probability, every time it comes to the 50 SMA, we get roughly a 10-point move, 10-point move, 10-point move, 10-point move, 10-point move. Now, we get in the trade, right? How do we manage the trade? Well, based on psychology, guys, if every time it comes to the 50 SMA, the stock actually bounce and go higher, well, now our one job is to be at the 50 SMA, waiting patiently, and when we get the confirmation that price is bouncing, we get in. Now you say, how do we manage the risk in this specific trade? Well, if you get in right on the bounce above the 50 SMA, it means that your stop loss level would be below the 50 SMA. So basically, if price broke the 50 SMA, then we 100% can say we no longer want it to be in that trade, because price action is doing something that it has never really done before. So that is how we manage that. We jump in, we got a quick 10 points. If you were trading options, or you know how to trade options, 10 points on a 0.70 delta, that means every 1 point the stock move, we'd have made 70 cents. So 10 times 7, we'd have made $7 on our options from the 56 level up to the 64, and if we're still holding it up to the 68 or the potential 72 level, we still got a lot more profit to go. So I wanted to show you how you can identify in this example something that price has done before, and it continuously do it, and as long as price continue to behave or show those common characteristics, you can use that as a potential opportunity to find a trade. Okay, that is example number 1. Example number 2, come on guys, you already know this one. This is one of my favorite, and it is Aapl. Now guys, I love Aapl. I got the iPhone, I got everything Aapl. This is such a great company, but that doesn't even matter. What matters is how can we look at the chart and find a good opportunity to trade this to make some quick money. Even if you are an investor and you learn how to read price action, this simply means that now you're giving yourself another opportunity to make additional profit on top of your long-term investment. Okay, and that is where learning to read price action really comes in, and that's where it makes a difference. All right, so let me break down this chart and show you how we were able to find 2 trades, one that is still currently in play, and one that we took the profit already. All right, so guys, we had this nice run. We ran up, we hit a resistance, we had this bearish engulfing candle followed by another bearish engulfing candle, and Aapl pulled down. We had a nice little bear flag here, broke down, and it came back to this gap level, which is a support zone. All right, so from there we see price bounce, it pulled back, and then it bounced again. Now if you look at this big picture, this is a 1 top, this is a 2 top. So it means that though this is very close, I consider it to be, a small W are a double tap. What does that mean? It means price came down, hit the support level twice. So when it hit it the first time, there was nothing to do. We just paid attention. It ran up, hit its head on the moving averages, and then it came back down. Now we were actually down here waiting patiently for this. And when we got the bounce, the confirmation, we got in and we rode it up. We took the profits. Why did we take the profits? Because, you know, right here, it wasn't doing a lot of anything, but price consolidated right above the moving averages, guys. And what do we have? We have a bull flag pattern. Okay, so on Wednesday, Thursday of last week, we took this trade again, and what do you know? We got a gap up today. We gap up, and price continues to run higher and closed very strong on increasing volume. Guys, today this thing traded around 200 and something million shares. That is very, very bullish. Where are we looking to take profit? This is a trade and not a investment. So for this specific trade, so we are going to trade it as a trade. All right, the investment is going to stay there. We're going to hold this for a long period of time, but the trade that we saw right here, that is the bull flag, and we entered right here, this is working nice. We're looking to close that trade out when it gets back to the resistance level. So guys, do you see how right here, just by being able to read the price action, you don't have to allow FOMO, which is fear of missing out, to, you know, cause you to make reckless decision by just jumping in the trade late. You can actually be in these trades early, just like we were in, you know, Aapl from last week Thursday. And man, this thing is paying very, very nice right now. Okay, so we're looking to close it out. If it acts silly when it gets to 129 as a trade, we will gladly take that profit from 115 to 129. You know, that's over 10, that's around 14, almost 15 bucks per share, guys. And this is what you get when you learn to read the price action. So that is trade number one. Number two, number one, it was price actually bouncing off a support, and that support was the SMA and the EMA moving average. So this is fun, guys. This is fun. We just have to get good at looking, you know, for those specific characteristics that will provide a opportunity for us to make money. These characteristics has to be something that we've seen before, we know how they behave, and we manage them accordingly. Now, someone will ask, when I got in the trade on Friday or Thursday, where was my stop loss level? Well, you know, my stop loss level is going to be the 50 SMA, because we see that price has broken back above all the SMAs right now, and it built a base above the SMA. So as long as price doesn't break back below the SMA right here, I would still be in this trade, and you can trail it up as it goes up to protect your profit. All right, that is a quick, fabulous trade, guys. Clean and simple. All right, trade number 3, guys. Man, I know you use this software every day, guys, and it provides a lot of money, a lot of opportunity to make money. So we just have to pay attention to these price action, because they can change your life. Guys, Facebook, guys. Again, I like Facebook as a long-term investment, but as a trader, I'm also focusing on price action. How can I make some money off what is going on right here, right now? Okay, I'm gonna break it down, show you. So we see, man, Facebook has been in a very, very nice uptrend. All right, that's number one. Number two is that when we hit this 247 level, that was actually a breakout, because we were having some problem with this level, it was a strong resistance for roughly almost two months. It was a strong resistance. Then price broke out on earnings. It pulled back to that resistance and it held us as support. All right, then from there price run up, made a new high, and from there price pulled back down. Guys, this is where we have to pay attention, because look, right over here, that was resistance, now becomes support. And what happened here? Price come back down, hit the support level again. So this was a opportunity to go long and ride this thing up to this level and potentially hold that trade. All right, I didn't catch this right here because I wasn't paying attention, but after it run up, it pulled back and then it started to bounce somewhere here. And you know, we took this trade initially, it pulled back down, stopped me out at the 50 SMA, but 2 days later this thing bounced back above all the SMAs and the EMA. And guys, what do we have right here? We have a very, very nice bull flag pattern. So again, on Thursday I was in on this trade, and today, what do you know, this thing gapped up, run up, it gave back a little bit of the profit, you know, right here at this 280 level, because over here that was a resistance area. But I'm not very, very concerned too much about that. Why? Because let me find another chart. I can see that the momentum is very, very strong. All right, how do we measure momentum? Well, the Bollinger Band typically is an indicator that is used to measure our volatility. And today, guys, we broke out of that Bollinger Band. You can also see that the bands are starting to separate pretty much widely. So I'm still anticipating that Facebook comes up here to the 290 or potentially back to 300 before earnings, which is on the 28th of August. All right, so guys, this is why it's very good to, you know, focus, be patient, and, you know, try to master your craft. It's not gonna happen in one day, it's not gonna happen in 1 month, it probably won't even happen in 1 year. But if you never quit, you, my friend, can get to the other side. All right, you may be wondering, what is this purple line I have here? Well, I have options, and this is where I'm looking to, you know, maybe get cautious on my options, because right at that level, one of my options would have given me around $40 in profit right here. So, you know, I'm gonna be monitoring this level very closely. But the fact of the matter is, guys, we just have to get good at reading the patterns. If you get good at reading the patterns, stay patient, and you can make money in the stock market. It's very simple. A lot of people, you know, try to make it too complicated and complicate it, but it's very simple. All right, so guys, if you like this video, just hit that thumbs up, and if you have questions, just throw them down there in the comment section, and I'll be down there giving you my feedback on, you know, whatever it is you have to say about this video. If you want to follow me, guys, you can come on over to Facebook in Trading the Charts Pro community, and I'm sharing a lot of value over there. I look forward to seeing you guys in my next video.